Well, hello again, traders, and welcome out. This is Ankit from Currencies here, and we're back with another market recap. It's a Monday, November the 14th. Let's get into it. Let's talk about today's market price action, talk about what we discussed in the currency room, and talk about our upcoming 24 hours. So make sure you go ahead and watch the currency room first, because that will give you a bit of a context of what we are looking at this week. So last week was a big week. We had a major movements across the board, across in the dollar and in the equity market. So today was a bit of an important day because we were looking for either a bit of a push to the upside, or we see if the market actually holds all these gains. So the price action today was not as encouraging. If you look at the candlestick today, the candlestick was actually stronger during the day, but did pull back towards the end of the day. So if you really look at the candle close today, it was not a bullish candle. So this is again telling us that we could see a bit of a pullback in the next 24 hours. So where could it pull back to? This is the prior breakout, which is now the support. This is the level we want to test. Overall, nothing really goes one way. I think we can still remain bullish, and in the short term, expect a bit of a pullback. So I think for this market move, it'll be healthy for this to retest that prior breakout point. So based on today's close, I think I'll be less bullish on the markets in the shorter term, and expect markets to even pull back. So that's where you can decide to either play a pullback to the downside, or stay on the sideline and let the market kind of create a higher low. Overall, this has been a nice little turns of events in the markets. So I think at this point there's less reasons to be bearish, but overall this market continues to be testing the direction. So being flexible is really the key here. So if you look at the percentage change today, again, we saw SPX pull back 0.89%, VT pulled back 0.97%, cryptos were down, gold was flat, and oil was down. So again, what this is showing to us is that markets are digesting the last week's move. Last week was a huge movement across the board. So usually when you get a big move like that, you start to get a bit of a pullback or some sort of consolidation. So right now we're just getting a bit of a pullback. And again, like I said, most of those little losses that came today were in the second half of the day. So we'll take a look at the intraday chart and see what it's telling us. So the world market index again looks bullish. So overall, the market picture is definitely better. We have a better scoring system as we did earlier, where things were a lot more on the bearish side. But again, what we're just getting is a bit of a pullback. Now, crypto again looks pretty weak. Again, if you really look at this movement, then I know some traders really are jumping in, trying to get into the crypto market. Again, this is not the time. A lot of bad news out there. So even though they're not falling apart right now, doesn't mean it won't. I think it's just a matter of time before we actually break that support on the crypto and we start to see a major jump across the board. So that's something a bit of a risky risk that's out there in the crypto world. So outside of that, really the currency markets were more on the muted side. We didn't see a whole lot of reversal as the market reversed in the second half of the day. So we'll take a look at currencies as well and see, okay, which way currencies are heading to, because overall we talked about how currencies are kind of following that risk on and risk off theme. So we had major movements last week, so we'll have to see what really transpired in the last 24 hours here. So the overall market again remains bullish. I think we have a +2 above the 20 to 50-day moving average, but overall we could expect a bit of a retest of that prior breakout point. Now, looking at the schedule, this is where we're trying to figure out if we have more of these news events that we can capitalize on. Tomorrow we have the pound employment report, but I think the most important one that I'll be paying attention to is this PPI. So PPI is due at 8:30, and remember, this whole downside or this recovery in the market really started with the inflation print last week. So if this PPI comes out a bit more stronger, I think that could really cause a bit of a tug and pull between the markets or between the dollar. We kind of have to wait and see what happens tomorrow. We not only the PPI, we have this PMI, the Empire State Manufacturing Index as well. So I think that's something we need to pay attention to. I mean, this again is a moderately busy week. We have on Wednesday we have the CPI figures coming out. We have the employment report coming out. But overall, I think tomorrow we can get a bit of a push in the morning. But right now, it's just the global markets is what's really driving the movements within the currency. So let's do a quick currency analysis and see, okay, how things were on Friday and how things are in this first trading day today. So last week on Friday, I mean, we had pretty good trending scores or velocity scores across the board. We had the dollar and this Canadian dollar sitting at a -3, and we had a yen that was sitting at a +3. So we were getting a lot of, bullish and bearish signs. So let's see how things kind of turned out so far. I mean, there is some relative strength in the Swiss franc. Aussie and Kiwi were doing better off their better risk sentiment. So there's definitely these are the currencies that we need to pay attention to. What's the dollar doing? What's the yen doing? Because last week, dollar yen had the big move across the board. So if this markets are reversing a little bit, does that mean we see a bit of a reversal in those currency pairs? So that's what we need to look at and see what the percentage movement says. So let's take a look at the daily performance and see, okay, what was the big mover percentage wise? In the crypto world, you can see it's pretty much a mixed bag here. I mean, the main coins like the Bitcoin and Ethereum was not a big mover. But outside of that, we had the XRP was up, the Cardano was down. I mean, this is a mixed picture overall, but this is not in any shape or form a bullish sign. We haven't even seen a recovery in the crypto. So far, bearish sign across the board. Now, let's take a look at currencies. So in currencies, I mean, we had some sort of relief rallies in some of the pairs. Like we had the dollar that was the weakest currency on a Friday. It did try to jump up a little bit. On the other hand, we had the Japanese yen, and that actually was the strongest, and that did pair some gains. So again, what we are getting is in this divergence between the dollar and the yen. So we really need to pay attention to dollar yen pairing and see which way the move is going to be for the next big move. The euro and the Swiss franc are more on the same sort of percentage scale. Again, I'm definitely finding that Swiss franc is all of a sudden it's really catching some bit here. So for the most part, we had this euro strength versus Swiss franc weakness, and it seems like they're kind of coming back in between here. So pay attention to euro Swiss franc cross, trying to figure out which one we're ready to pick. Now pound, it seems like there's some relative weakness in the pound, and I think the comparing the pound to the euro, I mean, pound seems to be a lot more weaker. So paying attention to the pound in the next 24 hours. CAD did pull back a little bit. So again, remember, CAD was also one of the other worst currency on a Friday. So while the dollar jumped, the CAD remained weak. So that's something not a good sign for the CAD. I mean, we had a nice breakout out of the range in the currency basket. So we'll have to kind of see if the CAD has any sort of life left, or is this where CAD is going to be a weaker currency, even comparing it to the dollar. Now, the Aussie and the Kiwi, again, these two currencies seems to be not really taking a big part. I mean, Kiwi seems to be pulling back a little bit where Aussie was still moderately strong. But on a Friday, the Aussie was not really the biggest mover. So there's definitely the sporadic movements that we're getting in the markets where one seems to be more catching a bid than the other at different times. So as a trader, you definitely want to make sure you're keeping a close eye on relative strength and weakness. So from last week to today, let's take a look at where the velocity score is. So there's some improvement in the velocity score for the dollar. The dollar come to a -1, and the Canadian dollar shift to a -2. So I mean, overall, they're not out of the woods yet. Even though we had a good performance today, doesn't mean the overall the picture has changed. So we need to really break out of this little downward trend or consolidation phase that we are in right now to really move the score for the dollar to go on the right side. Outside of that, we had the yen. When yen was sitting at a +3, and then that did come down to a 0 here. So the only place where I'm really finding relative strength is Swiss franc. Seems to be holding steady. So if you're really paying attention to some of the pairs that has that less volatility but more consistency, seems like Swiss franc is the one. But outside of that, euro, Aussie, and Kiwi, they're holding okay. But remember, if the market, as we saw that pullback in the markets in the second half of the day, I mean, then we have a little bit more risk for Aussie and Kiwi to kind of move lower, and the scoring can get better for the dollar and even the CAD. So it's really, as you can see, that the price action is really getting pushed around. And I think that's what's really happening in these volatile market conditions, is that things are shifting around a lot. We have a couple of days of very strong movements, but that doesn't necessarily mean that we have going to be a continuation in that one way. In between, you will have some pullbacks. You will have some things that will go away from the overall the picture that you had 2 days ago. But that's where flexibility is really the key in these market conditions. So let's take a look at possible trades and talk about what we looking at in the next 24 hours. And as you can see that I'm just going to zoom in on this intraday chart on the S&P 500. So you can see markets were actually, this is where the market did open up, and markets were actually doing okay only towards the second half of the day. So starting at about 2:30, we started to see a pullback in the markets, and then you can see that just continued to go lower. No bounce that came towards the end of the day, which is not a good sign, and we just continue to kind of stay on the sideline here. So we're kind of consolidating a little bit in this little low base, but as you can see in this chart here, on a 4-hour chart, we are likely to test that resistance, which is now the support. I think that's the first line of defense. That's where we can see some buyers kind of coming in, but I think we need to see a bit of a pullback towards that point. Overall, again, after markets having that huge move last week, I think it'll be healthy for this to kind of pull back further. But I think in the shorter term, if you are bullish, and not really, ready to go on the bearish side, I think this is where you just wait and watch. You just wait for this consolidation to kind of work out. This is a consolidation we have right now, and we can kind of go back and forth within that range. So that's something we can expect from the equity markets. Now, let's talk about currencies. So in the currency market, again, we have the technicals are not the greatest. Look at the Kiwi here on hourly to a 4-hour chart. We can kind of say that we have the resistance in place. It's not really falling apart, but it's not really rallying like crazy either. So the expectation for this to really be in this sideways range for me. In a sideways range, you're not getting those, crazy moves one with the other. I think we're just staying within that smaller range. So right now, as you can see, the range has been kind of very small between this Kiwi over here. So until it breaks out, I don't want to play an upside. But in the meantime, it can test and kind of go towards this bottom of the channel here, which again kind of fits in line with what we have seen in this Kiwi here. So I think for now, sideways to slightly bearish is where I'm looking at for the Kiwi. On the other hand, the Aussie is actually doing much better. So let's actually go into the Aussie Kiwi pairing just to see which one is really doing better, because for last few weeks, Kiwi has actually done really well. So as you can see that the trend is kind of turning here a little bit for the Aussie Kiwi. It did rally, late last week, pull back, and then rallying again. If it does break out above this level on Aussie Kiwi, if it gets above that 102.20 to 102.40, I think we can kind of say that the Aussie is ready to resume more to the upside compared to the Kiwi. So again, talking about relative strength of weakness, in that case, we like Kiwi more weaker than the Aussie. On the other hand, let's take a look at the Canadian dollar. I know I had a lot of questions about Canadian dollar, because this is again one of those currencies that I've been watching, and again for the last few months it has really done nothing. This is a whole lot of sideways movement, and that's again not a fun trading environment for this to be in. So now if we got that break, so the thing I was looking for today was that do we bounce further up? But again, if you look at it, the intraday price action, it did bounce, but then did sold off that rally here. So I think if you really take a look at dollar, I think that's what you really need to pay attention to. If the dollar remains weak, I think the CAD is continued to kind of follow that suit. But on a day like today, dollar did rally, but the CAD did not. It's just telling me that CAD has a little bit more relative weakness. But again, I think if the market environment looks positive, I think that's the right time to be shorting the CAD. But outside of that, I think the dollar probably be a better pairing. So I think that's the way I'm looking at it. Instead of shorting the dollar, I think I really like CAD short here as well. So let's talk about dollar here. Dollar after a major fall last week. And I think this is where I had a lot of questions from traders in the past few days as well. Where is the dollar to move down? Is the dollar peaked? So I mean, you can see that the major reversal in the dollar off the CPI, and it just continued to be weak. So now we're just catching a little bit of consolidation. The question is this a buying the dip opportunity, or is it selling the rip opportunity? So I think at this point, it's pretty clear we actually come down quite aggressively in a very short period of time. So in this chart, we have a support right here on the dollar. I think dollar can stay within this little range here. Again, today's price action was not a price action that you want to be long at. But again, this is what you want to pay attention to. This little small consolidation period in dollar. If the dollar can break above this little resistance here, I think I'll be ready to pull the kind of turn into the bullish side on the dollar for the short term. Because I think after breaking that, we have a nice little range to the upside that you can really get to. So I like that shorter term reversal on dollar if you can break that resistance here. So on the currency basket, this is where I'll go in. I have the alert set up already. If the alert kind of triggers in, then that's mean the dollar is actually moving onto the upside. So that's what we're really looking at dollar here. So I think if the dollar gains, then we know exactly what to do. We got to go look for a short in the Kiwi. I mean, not so much on the Aussie. I think I like Kiwi much better. Now let's take a look at some of the European currencies. So the pound looks a little bit weaker to me here. It's going sideways, but notice that it's not really making a higher high. It's actually trading this small little range here. So I think upon breaking the support here, I mean, it kind of goes back to the support here. It's kind of staying within this range, but if below that, there's definitely more downside risk on the pound. So I think same thing. If I have to really make that trade, I'll take a look at pound dollar as well. But again, we are not really breaking lower, but that needs to break that 117 level for me to get excited here, breaking below this parabolic SAR. So that's what I'll be looking at for a dollar reversal. So I think the big question really here to answer is that, okay, let's actually take a look at yen first before we touch on that topic. So the yen, on the other hand, you can see had a nice movement last week. And again, this is coming off from that negative divergence. I mean, we are seeing the dollar last week. I mean, dollar yen dropped pretty dramatically across the board. You can see that was a huge turn. And again, this was always surprising for traders. And even personally, I was actually expecting a bigger move off of these interventions. But notice that the intervention came along here. Notice what happened. A full recovery. The intervention came over here. We just went sideways. So this is really coming off from the dollar weakness. And it's interestingly, the dollar yen trade is kind of unwinding, which is causing the yen to go up. So I think in the shorter term, after that big fall, I think, again, same question really is that, is this going to rally? Is this a buying the dip opportunity, or is it going to fall? I think nothing really has changed for dollar. I think right now there's still a lot of expectation, over markets are getting ahead of itself with the inflation figures. But the Fed at the same time is staying on track. I mean, we are not really getting this move off the Fed. We're getting this move off the anticipation. So you got to keep in mind that, once the Fed really turns, that's really the time to turn for ourselves. But I think in between, there will be times that, you will see this market getting ahead of itself, but that can really reverse pretty quickly as well. So just to give you a comparison, let's go back to August, because that was the last time we got a negative or below expectation reading for the inflation. And you can see that going into that report, the dollar was weak. And when we got that news, dollar was weak. But that did not translate into a weak dollar. And actually, dollar decided to reverse after. So the question really here is that, is this something we're likely to see again? Or this is not really the same environment and we likely to see dollar more to the downside? I think that's where I'm at personally. I mean, we have seen this before. If the dollar wants to go lower, I think just look at the consolidation phase, and that's where we need to go follow that. If the dollar starts to reverse in the shorter term and try to go higher, I think that would be, again, a good signal to kind of get back in the same trade after the big move last week. So that's the game plan for next 24 hours. Again, market likely to pull back after this bearish close today. So again, looking for some near term, shorter term bearishness. But then again, tomorrow morning when the markets open up, another sort of fight starts with the market, and then they see if the market recovers or market stays weak. Again, this is a good time to pay attention to not just the currencies but equities as well, because this is where the risk on and risk off theme kind of playing strong here. The US PPI and this Empire Manufacturing Index number tomorrow morning 8:30. I think that'll be the time to really start trading, or if you're looking for some of the dollar trades, I think that'll be the time to do so. But outside of that, follow proper position sizing. Plenty of classes coming this week, so pay attention to that. And otherwise, if you have any questions, reach out. Other than happy trading, and see you in the next update.